Great, thank you very much. Great, so it's so exciting. This whole event is really exciting. We wanted to start out with early stage companies. We wanted to celebrate some of the brands that are on the verge of breaking out, which we just saw 6 great CEOs who have been working at it and are really on the edge of things. And we thought we would sort of bring it full circle with a discussion from a short discussion with investors on their perspective on things and how they look at brands, since this is an investment conference and we're about to hear who's going to get an investment. So let's start with short introductions. Maybe a little bit about yourself and your firm and how you got interested in food in the first place.
Yeah, definitely. So I'm McConnell Smith. I'm from VMG Partners. We're a consumer growth equity fund based in San Francisco. We're pretty narrowly focused from a category standpoint. So we spend all of our time in what we call branded consumables. So really heavy emphasis on food, beverage, personal care and beauty, pet, and wellness. We really like those categories where you can kind of engage with the consumer on a recurring basis and have multiple touch points, and really heavy emphasis on the branded side. And then the other piece that we really focus on and kind of pride ourselves on is on really being kind of founder focused. So all of our businesses are entrepreneur led, and we're really involved in kind of partnering with businesses when they've kind of proven momentum, they've got some kind of scale and distribution, and they're really ready to kind of accelerate things and really kind of reach that next level. And so it's been an exciting time, and I've been there for about 4 years and kind of work with a handful of our portfolio companies there. Prior to that, I was doing consumer investment banking a lot in early stage food and beverage, which is how I got to know the folks over at VMG.
I'm Jake Kindrachuk. I founded Village Family Capital here in Portland about 4 or 5 years ago. Previously, I was with Endeavor Capital and helped facilitate the investment into New Seasons, which is how I got to know Lisa. And with that, I spent obviously a fair amount of time in the food space, but kind of recognized that there was still quite a need here in Portland with so much creativity and just close to the natural ingredients and a town full of foodies wanting kind of the next best thing, as well as the generous support of New Seasons that is able to make products more commercially viable sooner than probably in most other markets, because they're able to get onto the shelves as opposed to just in the farmers market. So with that, recognize that there was kind of this need in the market of kind of in between the friends and family round and the larger institutional investors to be able to provide financial capital, but really not just financial capital, really trying to leverage the great talent that we have and the brilliant talent that we have here to provide human capital alongside the financial capital, really help steward an entrepreneur that clearly has a successful and driven idea, but surround him or her with people that can actually answer questions, because they're usually surrounded by people just asking them. So that's kind of the idea of starting Village.
Great, thanks a lot. So McConnell, you're here because you invested in Humm, and I was wondering if you could tell us a little. We heard Jamie speak earlier. Could you tell us a little bit how that came about and sort of what you saw in them and why you guys are excited about it?
Yeah, no, and Jamie alluded to some of the reasons that we were really excited about the business and the brand when we first got to know kind of her and the team. But I think the point around accessibility was really big one. I think a lot of folks in the room are probably very familiar with the kombucha category and saw a lot of the just really tremendous growth and kind of expansion of that category. And so that's what kind of piqued our interest initially. And as we got more knowledgeable on the space, we really liked what Jamie and the team were doing with really kind of attacking the category from a different perspective and not going right at GTs or Health Aid or trying to do some of the brands that have been very successful, obviously, but not trying to do the same kind of traditional positioning and flavor profile. And so that was a big component of it. Jamie herself and Michelle those were kind of key relationships for us. Again, a big part of what we're doing is not just investing in the brand and the business, but also investing behind the people. And so getting to know Jamie and the rest of the leadership team there and feeling like we were really strategically aligned and felt very comfortable with kind of the brand and the business in their hands going forward. And then I think that the third piece that was really impressive on what they'd built was not only had they generated a lot of kind of excitement about the brand and the business and kind of grown really tremendously, but they built a really solid business. And I think that's something that gets overlooked, especially in today's market with so much capital out there. There's kind of the temptation to really focus solely on top line and kind of forget about or neglect some of the more fundamental kind of aspects of it. But just the way that they'd been just super scrappy and kind of piecing together their production facility and kind of growing distribution on a really tight budget without raising really any material capital before we got involved, I think was really impressive with to us.
So the criteria you're looking at, team, brand, and then just building the business is sort of interesting. Is there more, you unpack that a little bit more, like is it capital efficiency I hear, is there margins and things like that you look for in particular?
Yeah, so capital efficiency is definitely a big one. I think you can define that a number of different ways, but the way we think about it is because we're so brand focused, we don't want our businesses to really be optimizing for just pure profitability. When we're investing, typically that's not in the best long-term interest of the brand. So it's more about building kind of a healthy gross margin profile, running on a relatively lean team and only kind of hiring folks when you kind of need them, as opposed to trying to throw bodies at solutions, but really driving hard for kind of healthy gross margin so that you've got more to just organically reinvest behind the brand.
And Jake, from your standpoint, are you looking at the same types of criteria? Is there anything different from your standpoint?
Yeah, I'd say pretty similar. I mean, I think no money, no mission. If you don't have gross profit, it's a challenge to really develop a brand. And so I think a lot of entrepreneurs are able to just focus so much on sales, and sales are, in my mind, just a means to get gross profit. But if it's not generating gross profit, it's probably a waste of time. So definitely starting at that, looking at those gross margins, making sure that, because it's also indicative of the consumer and how much they value the product or not, as to whether or not you can really drive those premium margins. But from my perspective, a little bit more, maybe slightly earlier stage than VMG perhaps, where there does need to be some bottom line cash flow to be able to get to the point of really being able to add kind of less dilutive equity fuel to the fire to really drive the brand. And so in the a little bit kind of at first you just try to get off the ground. Then I do think it's important to be able to have some bottom line EBITDA to be able to get to the point where now it's just really about you've clearly proven your business, but to get to that next level of super regional or national level, you bring on a VMG to be able to show you the playbook, along with a healthy chunk of equity to be able to pad the balance sheet, to give you the runway to really drive that brand awareness. Because then ultimately, when you look to exit, you will be looked at as a multiple of your revenue, assuming you have the strong gross margins, and the acquirer will put in whatever cost structure they want below that. They already have their own cost structure. So EBITDA at that later stage maybe isn't quite as important. But for the kind of the category or the size or stage that I play in, it's important to make sure that you can still have a business tomorrow and fund it to be able to get to that point.
Great. You both used the term, you said proving momentum, and then you said proving the business. More specificity around that, like is that a revenue target? Is that a number of stores? What does that look like from your standpoint?
Yeah, I mean, so there there has to be some baseline kind of revenue that you're hitting just for us to get comfortable, because we're not venture investors, and so it's not that super early stage. But we look more at sell-through, and really at sell-through performance in kind of a handful of key accounts. There's probably 5 to 10, and I'm sure you guys know kind of the kind of more national ones, and kind of have had conversations with a lot of them. But we really want to feel comfortable that a business is growing organically, and that the top line growth that we're seeing is not purely distribution driven, that there's a really healthy core base business underlying that. And we would much rather, I find it much more exciting when a business is growing maybe 40 or 50%, but it's almost all velocity driven, and you're getting new SKUs, and a few key retailers are really leaning in, than a business that's growing 100 or 200%, and it's purely new doors are opening up, but where you're at, you're kind of, your performance is a little bit middling, and there's not real kind of trajectory toward being kind of a category leader there. So it's kind of, it's definitely top line oriented, but it's kind of decomposing that to really look at like, okay, where is the growth coming from?
Okay.
Yeah, I mean, I think from my perspective, I think it's a little bit different stage from when I'm looking at it. I typically don't necessarily have as much of the SPINS data or some of those others to be able to look at sell-through. So sometimes for that earlier stage, you kind of have to look at more of the tea leaves, and it might not be as quantitative as I or probably my investors would like it to be, but you pull together some, even if it's just kind of qualitative. You have a retailer who's kind of tripping over themselves to get more of your product in the door. They're asking you for different SKUs or more SKUs, or I biked here and bike around town, and just seeing if there's a line around the corner, then there's probably there's something going right there. So sometimes earlier stage, you're a little bit, you don't have as much data as you would like to be able to make some of these decisions, and it requires kind of getting a little bit creative to see what does proven mean.
Okay. Category you really like and are excited about in the future, and one that you're less excited about moving forward?
I think the categories that are really reinventing a category or full-on new categories are always kind of that exciting area. It doesn't have to be. I mean, look at Ben. I mean, salt has been around for forever, and look at the success that he's having by just being able to reinvent it, and sometimes that is just kind of to shake it up, and it does quickly. The categories do just become complacent. So continually looking at that creativity that can be in a current category or something new that's emerging. Although you say new, and kombucha has been around for thousands of years, so you never know kind of what's going to be kind of that next wave. But it's largely looking at the consumer. Categories that maybe for me as an investor become a little bit more challenging are those that do get saturated, and that the trade area becomes within the stone's throw of your house or wherever you may be visiting. And I think the beer industry is experiencing a little of that. I know what I choose is literally what's down the street, and when I travel, I pretty much ask the bartender what's the closest brewery to here. And so those when trade areas like that become so tight, that becomes a challenge as an investor to really be able to scale it. It's not necessarily a bad company to own if and you can cash flow it, but as an outside investor coming in, it becomes challenging to be able to scale for a profitable exit.
Yeah, and we're less kind of macro focused when we invest, so we don't really go out and say, hey, here's a category that we really like and want to get exposure to. To us, it's more about get to know the brand, get to know the team, and if we can get comfortable with kind of those dynamics and then find a solid business, then hopefully you've got favorable kind of category dynamics overlaying that. That said, I think a few categories that are pretty interesting right now. One is I think frozen is really interesting. I think that it's one that you think about, kind of big category that a lot of the doors haven't really been turned over. You're starting to see some brands like a Real Good Foods and things like that are starting to have some success. Yeah, I saw it a lot with like the light ice cream, but I think there's probably some more to come there. And then I think with just how much physical space is dedicated in stores to that, like those freezers aren't going anywhere. And I think as consumers continue to move, I think there's an opportunity for a lot of brands in this kind of stage that are doing things in a much better, kind of more interesting way to kind of disrupt that. And then categories that we don't like, again, there's none really that we're kind of staying away from, just given how focused we are from a category standpoint to begin with. We can't be too choosy within that. But yeah, I think anywhere where there's like super high private label concentration is always a little bit scary. Really high promotional dynamics, and then really high kind of single or kind of top 2 brand concentration, I think are the ones where we found those to be probably a little bit most challenging.
Great. Well, I think we're going to call it with that, just because we're running a little bit short on time. So thank you guys very much. They'll be around at the reception to come and talk to you. Yeah, thanks.
Yeah, no, thank you everybody, and I think everyone's doing, like, this is the awesome part of our jobs, just to get to meet kind of folks like you guys who are doing all of these interesting things. And so just want to say, even though we tend to be a little bit later stage on the investing side, please feel free to reach out to me or anyone else at VMG anytime. I think we're, like you guys are doing here, just building kind of ecosystem and community it's a passion of ours, and it's really neat to see it happening, and we want to be supportive of that in any way possible.
And kudos and thanks to OEN for organizing this. I think it's a great turnout and important for our community. So much appreciated.
Thank you, guys.